Hello, everybody. This is Brandon from Galaxydoc Market. Today is May 18th, 2025. It's Sunday. It's approximately 9:25 a.m. Eastern Standard Time as I bring you this. And what else is there to talk about other than Moody's downgrade our debt on Friday, right after the futures markets close? Surprise, surprise, this is what they do. And now everybody's left hanging. I've been warning everybody about this, the economic uncertainty that was ahead. I was saying that yes, this Trump relief rally has legs, but do not trust it. This is short the rip situation. And so I'm going to be analyzing various aspects of the technicals of the market and where we stand with the situation. Okay, so here we go. So we want to, present this disclaimer. Pause it, read it. If you agree, please move forward. And then, of course, you can follow us at x.com/Galaxydoc Market. This is where I primarily reside now. I do continue to post on YouTube, but however, primarily I'm posting a lot of my content at x.com. A lot of commentaries, great interaction. Check us out over there and join us. All right, so we are in that season of U.S. holidays, and now we are very, very close because Memorial Day is on May 26th, not this week, but the following week. And those weeks either heading in to that holiday shortened week or during the holiday shortened week tend to be kind of crazy. However, this week is also options expiration. So that's monthly options expiration. So a lot of crazy things can happen this week. But be aware, in the next 2 weeks, we're going to have a holiday shortened week, Memorial Day. And just be prepared for that. And I've been harping on this because markets tend to be very, very choppy with a possible slight bullish bias during that week. All right, so since I've said that, here's my big, huge black swans. Frankly, there's so many black swans swimming around. I don't know what to make of it anymore. However, I've been saying steadfastly to watch the 10-year Treasury yield. And boy, have we been watching. If everybody has been noticing, as the market ramps higher, these sharp rallies are part of the corrective phases. And this is where I get my mantra about shorting the rips. The 10-year yield was also rising, which was showing you that the debt market was in serious trouble. And lo and behold, on Friday, of course, they downgrade the debt after the futures markets closes, and we can't do anything about it unless you were in our group, and we've been preparing likewise. Okay, so that is a warning. That is a problem. And we're going to be going over the last two instances, actually three, but I'm just going to go over the two instances in which other credit agencies like S&P 500 and Fitch downgraded U.S. debt and the resultant stock market action. So let's find out. So this is what we were treated to on May 16th, okay? After the futures market closes, and then here we go, the floodgates open. Moody's downgrades U.S. credit ratings for the first time in history. Oh boy, stocks are falling after hours, but they couldn't fall much further because everything was either halted or stopped, okay? And of course, not a great way to end the week, but what did you expect? This is what they do, okay? And then, of course, bar charts comes out with a fantastic compilation of all of the major sovereign debts and their yield. And if you notice, it's one thing. Everything is going higher, spiking higher, and it's just higher like that. Okay, so that is showing significant instability in the debt market, in the sovereign bonds, treasury bonds, other bonds of other major countries. And this is telling you one thing and one thing only, that there is a debt market / credit market implosion. And I've been saying, despite the fact that the banks have been propped up and artificially squeezed higher, these banks, the global banks, U.S. banks, regional banks, it doesn't matter. They are all essentially insolvent. Okay, at this point, the assets that they're holding on their balance sheet, they're pretending that it doesn't exist. Okay, how do you think that's going to end? And despite the fact that President Trump's relief rally engineered because of the tariff 90-day pause with China, he never ended the tariffs to China. It's a 90-day pause. The tariff rates are still there. It's just the exorbitant one that he placed is temporarily taken off the table. All of those things, despite him going to Saudi Arabia, UAE, and basically them treating him like a king, it really doesn't matter. Okay, all of those are protectionist measures, and I've been saying for a long time that the U.S. is preparing for what? Bankruptcy. Okay, this is what they do. This is when you shore up all of your assets, make yourself as strong as possible, and then hunker down and then work through that bankruptcy. This debt is not repayable unless we do some extreme measures. And I don't want you guys to think that the U.S. claiming bankruptcy is somehow a negative thing. I think that is something that's an eventuality. And quite frankly, I think this debt is unpayable, untenable, and we continue to create more debt and print money out of thin air. Which also puts my next thing, which I'm not going to talk about too much, is that the Fed is being exposed as what they are. They are a for-profit private bank run by foreign nationals that somehow usurp the power to print money and to control borrowing costs. And Federal Reserve Powell came out and said that, hey, that 2% inflation target, maybe then, I think we're going to adjust that. It's because they never had the power, okay? And Trump's kind of got him in a bad position now, right? Because Fed can't do anything other than jawbone at this point. All they can do is talk about how inflation is bad, but it's under control and that they are all for maximum employment. I call BS on that. See, Trump is pretty smart. He knows that the Fed, whether they cut rates or hike rates, it's all optics. The amount of money that's been printed and the improprieties about using these NGOs and I don't know what other conduits that they had of secretly printing that money and then buying its own bond that they issued, which should have been likely relative domain of the U.S. Treasury to issue debt, but somehow they do it, okay, is now basically affecting them, and they can't do anything. If they cut rates or raise rates, they are screwed. The rates are continuing to go high. However, Trump is on record saying that they should cut rates, which they can't. He's got them trapped, folks. He's exposing them for what they are, okay? So this is something that we've been warning you for a long time. All of this stuff, it is not just relegated to United States, okay? And oh boy, there's some fun stuff that are coming headed our way. However, it's not what you think. Okay, stay tuned. So here's the thing. Moody's downgraded the U.S. sovereign credit rating from its top tier AAA. Well, actually not capital A, but 1A with the two little A's. Okay, we've been downgraded twice already. Okay, over the years. And here it is right here. Okay, and a shout out to Nick Drendel for posting this. I think this was a fantastic one. Go and check him out. For my purposes, I'm going to talk about the 2011 first, August 5th. I can't talk this morning. It's early, folks. And so historically, this is a weekly chart. What's happened is, of course, they announced these right after the market closes and futures market closes on a Friday. And we basically get for that whole week, we get a whopper of a move, like 8 to 8% move, I believe. It went from split adjusted 103 all the way down into 90. Okay, that's a significant move. And so let's look at August 1st, 2023. Notice how in the past it was in August. Now we get a downgrade on May. Okay, and I'm going to show you some play on words, which is just kind of interesting for us to really see. That hike, right next to that hike, the last hike, see that arrow right here? Okay, that's where they downgraded. And of course, this is a daily chart, and then what you get is a resultant about a couple of weeks worth of a significant sharp pullback from the area right near the 448 down all the way into this 420, 418 level. Okay, folks. So is that what's going to happen? And I'm going to tell you, if you just got to watch this video and don't fast forward. I think it's worthwhile for you to be watching this. Okay, spent a lot of time making this just to help you guys out for free, might I add. All right, so here we go. So let's look at the market technical picture. What the heck are we dealing with? Well, what a difference a couple weeks makes. We go from extreme fear into now pegging into extreme greed. And who is being greedy? It's the retail folks. While the insiders, people like Warren Buffett, are sitting on piles of cash, while the insiders and whoever that be, I don't know, dumping United Healthcare stocks, and basically, were you in on that short? Our group was, and it's a gift that keeps on giving, but that's not what we're talking about. Tons of money was made on that trade alone, okay? And the market is euphorically moving higher, right? Well, everybody's celebrating, okay? We are no longer climbing the wall of fear, okay? We are now at greed, heading into extreme greed, which means that we are overbought at this point. Okay, this euphoria is done by retail. Don't be bag holders, folks. Okay. So where are we? So everyone, is looking at my long-term monthly chart, and they said, look, this is a big tail candle, and it's basically bottomed. Okay, it's doing what it exactly did back in, all of these tail candles, okay? And it may be. However, this is very, very early in the cycle, and that kind of a move was also predicated after we, in 2007, we basically bottomed. Everybody said, oh my gosh, it's basically bottomed. Yeah, we moved up for a couple months here, and then all hell broke loose, right? That's what, during the financial crisis, folks. We're just getting started, all right? Hold on to your panties. All right, this is this is just getting started, and it's getting delicious. Okay, the rips in the markets, these type of like a 20% rips higher, comes in the context of a bear market. And bear market, we are starting. Recession, I'm not sure. Is it deeper recession, stagflation? Add it all to the list. Okay, that's what's happening right now as we speak. All right, so VIX has been saying to sell, and I had thought that, we're kind of near this 1864 level. We have now come right down into 17.36. I believe this sell signal is coming to an end. Possibly, you got to watch this, the 50 SMA line. It's my proprietary line to start turning back up higher. This is the time to buy some time and to accumulate these areas. Not financial advice. You do what you need to do, but this is my analysis. This rally has legs, okay, guys? And it's climbing the wall of worry. It's just now hitting the top end of the range. And if you're a bear, you should be getting excited, not scared right now. All right, here's my McClellan Summation Index. Okay, I said last week that it's signaling continued bullish move higher, so I just left that on there. But there are divergences now forming on the MACD. Okay, we're starting to hit that extreme levels on the RSI and the MACD. RSI strength, but near extreme levels. And so can we get into this bottom end of this box that we talked about? I think that's where it's headed, down into this downtrending line. And so, yeah, it's got a little bit more legs. And so despite this Moody's downgrade, technically, historically, it should come down. But I think it's going to have a couple days of delay. We're going to talk about that in a second, okay? Which gives you time to position. All right, so let's talk about our friend gold, okay? And gold and silver has been systematically slammed. The thing is that the slam crew cannot get up below these levels, and all it's doing is now forming this triangular pattern, that which I believe will result upside, especially with the news about the debt downgrade. That's music to gold and silver's ears. We're finding support at this green line, which is the ADMA. Okay, momentum indicators are continuing to show some corrective action. Here's the MACD, and also we're beginning to form a death hook here. Yet the price right now is not cooperating, right? It's just a very measured, slow pullback, and that should worry you if you are bearish on gold and silver. Okay, let's look at silver. Silver is in a world of its own. It's in a consolidated sideways channel. We talked about this long-term multi-year cup and a handle, and that still exists. We are now chopping in this area. We have to get above this overhead resistance. Okay, every time we get into this 30, near that 35 level, we have gotten smashed down. Every time we have gotten into this 33.22 level, we are basically pulling back, but it is a very measured, and if you look at what this looks like, that is a bull flag, folks. All right, it's being manipulated. Okay, the banks and the powers that be cannot have gold and silver taken off because it would be the end of the fiat money system, for which the central banks are going to fight tooth and nail. Every day you can see the fallacy of their existence, however. US dollar, okay? Yeah, there is a rescue in progress, and basically we're now chopping around. We're at 101.09. They do want this above 100 at least, okay? But they really need to get above this 104.50 level, right at this green line, which is the overhead resistance, and that's the all clear signal, and that's where it's going. But given the fact that there's downgrades, there's protectionism still going on. Yes, Trump went to United Arab Emirates and Abu Dhabi, the Middle East, and had a splash of a weekend. Even the Democrats are basically saying, wow, he's doing a really great job. Guys, he's over there basically shoring up and preparing United States to default on its debt, either directly or indirectly, okay? One of the weapons it has is potentially revaluing that gold that's on their balance sheet that's priced from 1933 at $42. Right now, gold is above 3,200, is it not? Gold should be going much, much higher. It's a technical pullback. Think about it. Okay. 10-year yield. Okay. This is the one that's been warning us. Despite the fact that the market has been rallying, so has the 10-year yield. In fact, moving kind of like NVIDIA has. Here's a little gap. We just pulled back, fill that gap, all right, after hitting all, highs of 45.38. That is danger zone, folks. I don't believe this pullback's going to last much longer, especially with the debt downgrade. Expect a explosion of the 10-year yield. But again, I'm going to warn you guys out there, if you're blindly shorting this market, I have news for you, okay? The Trump rally is not done yet. Remember, Trump has the magic wand, I believe, just like all the other presidents have. It's an illusion of a market-driven economy. It's an illusion of fair markets. It's not fair markets, folks, okay? There's so much shenanigans going on right now. However, just be patient. And Moody's has fired the warning shot, and I believe they're going to, the powers that be, the central banks, and whoever the powers that be are going to fight Trump all the way because they don't want him in there. He's not part of the establishment. So let's go see what's going on with the S&P 500 technical analysis, and then, I won't ramble so much, but it is action-packed week, is it not? All right, SPY Weekly, my goodness gracious, big balls of fire. We got above the 20 SMA. It's now kind of clear skies all the way up into the 610 region, and that's what I'd be looking for in the market, and then start looking to really get involved. Okay, market is overextended at this point now. Okay, can we just peter out right here? Yeah, that's a major overhead resistance. So in between here, where we are at, okay, and here into the 610, possibly into the upper band of the Bollinger Band is a possibility. But let's see how Moody's affects this whole situation, because most of the market, 97% of the market, is controlled by CTAs, and the CTAs are going to basically react to that. Okay, so this is the weekly. We've got basically our falling RSI right here, and right into these areas. Let's see if we stop there. If not, we're going to probably tag into that 70s range and come back down. Yes, there was this big, huge volume marking the temporary bottom of this rally. Since then, its volume has been very lackluster. So we need to make sure that we understand that there is a airspace all the way down here, at least to the bottom of that uptrend line. And of course, there is a significant resistance right here and also down to here. And so somewhere in between here is where you should be pouncing. Okay, now, it doesn't mean that if the futures open up today in a few hours on Sunday night, and all hell breaks loose. Okay, historically that's been the norm, and it's always been preceded by some form of rescue. Okay, you see that? So don't tell me that the market is not managed or manipulated, because it is. Okay, it's an illusion of free market system, which we do not have. Okay, all right, so let's go look at the daily real quick. And the daily is no different, and realistically we have this uptrending line. It broke past there. Okay, and so we are kind of in a breakout situation, and Trump did warn, okay, that we were going to have a rally. So now here's a gap that's left. All gaps will eventually get filled, and so really what we're looking at on a daily time frame, probably more resolution, why I think we're going to go from 601, between 601 and 610. And that is a possibility. But again, you need to understand what the impact of the Moody's credit downgrade will be. Okay, and we're going to find out shortly. Okay, United Healthcare, the gift that keeps on giving. All right, so basically we gap down on heels of another potential DOJ investigation, even though they deny it. Okay, there's something going on in the background, but this company is laden with fraud. Medicare billing fraud, not paying doctors and patients, and collecting premiums and hiking premiums while not paying anything. Is it any wonder why the CEO, right? There's something going on with that whole CEO situation that they've put it under wraps. But we were able to take advantage of this significant gift that keeps on giving. All right, and we did bottom out right around 250 for now. And nothing goes down in a straight line, but I'm telling you right now, the areas that I would look forward to at 312, if it cannot get above this level, and then henceforth, really, if it extends into 339, that's an automatic short. I don't believe it's time to fill that gap yet. There's some rumors that the CEO, the acting CEO of the month at United Healthcare, is buying stock, so take that with a grain of salt. All right, so on the weekly, it's an absolute bloodbath. Yes, absolutely. And basically, these are all levels that we're looking at. These are my proprietary levels. You can pause it and put it in. We hit right around that 255 level, and we bounced quite a bounce. Okay, and now it's going to be a battle in between here, and this is where we just let it chop or buy more time, and let the next shoe to fall. Moody's downgraded is going to affect the stock of United States debt. BABA. Okay, BABA reported. This is the weekly chart. Okay, the earnings are horrific, folks. All right, so we get this candle. We're now finding support right at this ADMA on the weekly. Okay, next logical targets are 115, and coming into this gap, there is a gap here at 105. Pay attention to that. RSI has been losing steam. This is a stock that I'm long-term bearish on. Okay, with the problems inherent within China. Okay, this is a China play. All right, folks, look at my PPO ADX. Really, really nice negative formation. The crush indicator. Okay, accumulation distribution is on a downward trend. Folks, this is a great trade right here. We're also, advocating Futu. We got the black candle, okay, which is showing a distribution. RSI has been negative and divergent, Okay. However, when you look at the MACD, it is showing a bullish cross. Just because it's showing that, it needs to confirm. We got the positive divergences on the histogram, and that is what led to this rally. So you take that into context. This rally is largely over. This is something that we're looking at ahead of the earnings on the 29th of May. Okay. So you got ample warnings on that one. Tesla. All right, folks. Tesla has bottomed and basically is now doing its rally. I believe that it's going to have its real challenge at 380, but there's some more room for the for this move. However, if Moody is going to affect the market, we got some significant gaps that need to be filled, and we have yet to come down into these areas yet. Remember, in a bear market, no market goes down in a straight line. Usually the rallies are the big rip your face off rally types, and we said this rally has legs, and it continues to be so. So goes Apple, so goes the market. Apple has been absolutely weak. Really, the overall down trend is down. However, we saw some divergences forming on the RSI. It's just that the price action off of the lows of around 165-ish, okay, in April, has been bad. We are now hitting upon this volatility box. This is the overhead resistance. Can it extend into 224? Yes, it can. But the Moody's downgrade will affect this stock also. You got to put this on your watch list. UPS, I had to, this is the weekly, and I had to really push it back, about 10 years because this thing is, indicative of no matter what Trump says, no matter what the world says about this, this is an absolute bear flag. It's going to resolve downward. This is something that needs to be watched. Home Depot reports earnings, and as goes Home Depot, so goes the rest of the economy, because home buyers are strapped, homeowners are strapped, consumers are strapped. My consumer demand destruction is real, folks. All right, so we are above the 20 SMA. Possibly, can we pop and drop? I see Home Depot as a potential pop and drop. However, for those of you gamblers out there, I'm not telling you to do anything, but I could see a situation where this could yield significant returns if you by front running it. There's a gap here now. Moody's downgrade is basically a bad news for home buyers, right? People aren't buying homes, and if they don't have jobs, they're not going to be buying crap that they don't need from a store that they shouldn't be shopping at. Yeah, okay, so basically that's what we got. So that I'm watching these. Just notate these boxes. Okay, these are all drawn about a year ago, and these are the targets, and we have blown through them. We just have a dead cat bounce from these levels. Okay, this is a dead cat bounce. I do not believe retail apocalypse is over. All right. So that pretty much sums up my technical analysis. Of course, our group has much broader weekly watch lists, okay, that I'm not mentioning here, but this is what you get for being free, right? By the way, just a shameless plug, we have a new membership that's been popular. Everyone's been asking because they're saying I'm expensive, and I am, but I'm worth it. But for those of you that are looking for daily market commentaries at the beginning of the market with market pivots on SPY, VIX commentaries, and the weekly watch list, and any other commentary that I see fit, join the group. It's $49 a month, and you got to email me to find out about that if you want to do that. No worries. I think my videos have enough content and value for people that don't want to pay. That's fine. I just want you to do well. All right. Here is the earnings. Okay. Tuesday before market open, Home Depot, the Big Daddy, Palo Alto Network has potential. Target buy to TJ Maxx lows. You see, I'm all going with either the AI or the retail. Okay. Retail apocalypse is on Wednesday. And then we got Snowflake. Pay attention to Snowflake, folks. Okay. And then BBVA is one of those banks I believe may be in trouble. Okay, and so that's something that we want to look at carefully. Of course, Williams-Sonoma consumer demand destruction continues. All right, Deckers, Intuit, Okay, Workday, Ross. I just don't. They're not one of those stocks that move significantly even on bad earnings. But you got to pay attention to what they say about the health of the consumers. And Ross is a discount store. It ain't good, folks. All right, it's just not good right now. Okay. So let's look at XRP and Bitcoin. What are they doing right now? Let's find out. Okay, let's go find out. Let's go to my favorite coin of all time, XRP. XRP and Bitcoin, everything has been diverging. As the market went higher, we actually went lower. Okay, this is the divergence that we're looking at. Now that there is that announcement of the debt downgrade, we have also XRP basically at 2.4. Okay, so that's quite a bit of a jump from these levels when everyone was scared at 1.6. I mean, much lower below these levels. All right. My second thing is Shiba Inu. I continue to think that there's something going on with this meme stock. So here I said it. All right. Since I mentioned it, it basically went from 0.011 to 0.0149. There's 4 zeros in front of it, by the way. Okay. Too many zeros. I'm lazy. I don't want to talk about it. XDC continues to struggle, but I do believe it has bottomed. And this is, guys, what are you waiting for? It's screaming at you. All right. Bitcoin. Okay. Bitcoin is basically formed a nice little bull flag, hasn't it? All right. And it looks pretty bullish to me. This is not going up because the market's going up. This is going up in response to that downgrade by Moody's. Okay. There's some significant things headed our way, folks. Pay attention, okay? Pay attention and more attention. XRP is positioned as reserve bridge asset to provide liquidity. It's more than a global reserve currency or cross-border payments, folks, all right? Don't let that recent Judge Torres' ruling that they have to follow procedure and would not let them basically end the case early. That's just semantics, okay? Go buy more, okay? Gold is in a technical pullbacks. Gold and silver slams are not working. Silver is absolutely manipulated and suppressed, but it won't last long. It's not 110. It's actually 112 to 1 right now. Again, it goes up and down. Okay, so that's about where it is. Apples and oranges. Historically, this should be 10 to 1, 9 to 1. Waiting for the market stall and silver breakout. Can Moody's do it? Moody's continues to put credence to U.S. and the world debt market implosion. It just be very, very careful. Sometimes there's going to be a few days of delay that can happen. So in conclusion, Moody's downgrade, the 10-year yield has been warning us, and Moody's downgrade is what's coming. Just look at all the other bonds, at the other sovereign debts. Okay, the yields are exploding, folks. That's more than a recession. Is a depression headed our way? I don't know. Okay, watch the world bond yields. Catastrophe is coming. I can't talk this morning. Gold is in a technical pullback, but has been very controlled. Okay, for those of you calling for a $1,800, $2,000 strike, it's not going to happen. All right, XRP and Bitcoin has bottomed, and they are diverging. We are long gold, silver, VIX. Okay, this is a gift right here. Go buy some. Go buy some time and go buy some 25, 30s, 45s. I don't know. I mean, just have some fun with it. Okay, XRP, XDC, and here's the short watch. United Healthcare. Okay, use this bounce to your advantage. Okay, it's going to be sharp, but it's going to be fantastic. Okay, there's usually about a week or two delay after it bottoms, but SMCI is the same thing. It's above 40. Go short it. This is a fraudulent company. Baba is a play on China, and basically their earnings are horrific. Okay, let's see what Moody's does to that. UPS is an indicator of economic dishealth, non-health. Home Depot, Baidu, all report earnings. Lowe's and Decker, these are what I would, watch them. Okay, don't expect a sudden crash yet from Moody's action. Okay, historically it will impact the markets in the next 2 to 3 days, but still be on guard. Okay, let's see how the futures open up. But that's all I have to say. Again, I'm not able to keep this video down below 15 minutes, but I have so much to say. All right, follow me at Galaxydoc Market. Engage there. I put a lot of content there, and also I'm continuing to post on YouTube, so subscribe and follow. I'll still put content out there. You know what I've told you about YouTube, just not getting the engagement, and I just tell you what's going on, and sometimes I think YouTube doesn't like that. Okay, and It's so hard for little guys like me to grow, right? Thank you, and get some alpha. Like I said, I have a new, more affordable membership. Okay, basically you get your market commentary daily pivots for those of you that are scalping SPY or ES, and also the weekly watch list and any other type of developing things that you may not get fast at Twitter or YouTube. This is where you'll get it. Eventually, I'm going to keep all these videos, the live videos and live sessions within the group. I have a new platform that's coming out. So yeah, let me know if you want to join. Okay, you're going to get a lot more content than what you get from these videos. But regardless, thank you so much for watching again. Be careful out there. Let's see what happens with this Moody downgrade. Otherwise, let's get some alpha. Bye-bye.